Hey, today we've got with us Staff Sergeant Mr. David Play going to talk to us a little bit about VA lending. Dave was in the Marine Corps for how many years, Dave?
About 6 years.
6 years.
Six glorious years.
Good man. Thank you for serving, sir.
It's an honor. I enjoyed it.
Excellent. Well, you're the perfect person to teach us a little bit about VA lending. So, what are the real big benefits that most of our servicemen and women who are watching this video? What are the core benefits that they're going to receive by going the VA route?
One of the best things about VA home loans is it has some of the best pricing available. We won't get into that, but it has some of the most lenient guidelines as well. So it's easier to get a VA loan than it is really to get just about any other kind of loan. Along with that, there's typically no down payment required, and there's no mortgage insurance even if you don't have a 20% down payment. Those are just a few of the main bullet points.
Yeah, so it's a lot more flexible than your conventional programs, because a lot of people think, oh my goodness, I need 20% down. But the VA does, how much money is there typically out of pocket in a VA loan?
Honestly, you can get away with a VA loan with about $600 out of your pocket. You need to pay for an appraisal, which is usually anywhere from $400 to $500, and then a termite inspection or wood-destroying organism, as they call it now, inspection, which can run you anywhere from $75 to $125. That's it. Depending on how the loan is priced, depending on whether there are seller's concessions, meaning the seller is helping with the closing cost, you can get into a VA home loan with, again, as little as $600, give or take.
Mm-hmm. And the cool thing about this is that the military actually promotes this, not just with a VA loan, but you're also allowed a certain amount of their income as BAH benefits, right?
Correct. You can use basic allowance for housing. You can also, they also have something called residual income. So even if you have a what's called a debt to income ratio, basically all of the debts on your credit report compared to the mortgage payment, compared to the income that you're making has a percentage. Typically, you can't go over 45% with most other loans. VA, you can go beyond that. You can easily go up to 55% and get a standard underwriting approval. You can even go above 55% as long as what's known as residual income, and that's a whole other topic. But if your residual income is in lines, you can even go above 55% debt to income ratio, which means you can get more house or get that much more easily qualified for the house that you're looking to purchase.
Yeah. So, tell me a little bit about the flexible qualifications that I hear so much about when they say, VA loans are more flexible than conventional loans.
There's a number of reasons. First of all, there's no down payment required. Mm-hmm. So you can get into a VA home loan 100% loan with no down payment. You don't have to have You don't have to have a large down payment.